name is Rich. I work over at the Avenue Credit Union. I've been banking about 12 years now. I currently work in the fraud position over there. So I do like a wire fraud, account fraud, stuff like that. But in the beginning, I started off as a teller, worked my way over to analyzing credit during that time. I was studying criminal justice when I was in law enforcement, but I decided to stay in banking. That was a good decision there. Let's see here. So right now what we're going to do is we're going to go over some financial literacy. This is just going to go over the basics, budgeting, and then we're also going to go over, let's see, we're going to go over the credit reports as well. So if you want to, I believe each of you should have a guidebook. We're just going to go into page 3. So during this training course, hopefully at the end of it, what you'll be able to do is know how to use your savings, your budgets, and credit to improve your financial health. That's the main goal here. We're also going to utilize the budgeting tools to improve your financial situation as well. And then we're going to touch base on analyzing your credit report to identify opportunities to improve your financial health. And then in this guidebook, yeah, you're going to have, we're going to identify your goals, and then we're going to create the budget. And moving on to page 4 here, we're going to start off with your savings.
Which is that? I'm sorry.
Oh, yeah, so it's going to be page 4. Okay.
This is
Yeah, it's going to be your packet.
oh, the second of the budget.
This one, yeah, yeah, this one right here.
This one. Yeah, okay. Okay. Yeah.
Let's see here. So as far as your savings goes, so the most important thing with the savings is why. Why do you want to have that savings account? Just me personally, I find comfort in knowing that you have some funds to fall into. That's the big thing, because life happens and you're going to want to have something there. Some examples of what you should be saving for. The biggest one is going to be retirement. You're going to want to have those funds that when you find that time to retire, hopefully, and then maybe also down payments for your house, cars, or even just personal expenses as well. When might you need that emergency fund? Well, like I said, life happens. You might have medical expenses, right? Those are unexpected. Maybe in veterinarian, you got a pet, they get into something, and now you gotta take care of them as well. Maybe you've had kids. And then also, you might have, the car breaks down for maybe at your house. AC might go out, water heater, you also have to plan for that too. And also, what could cause you not to be able to pay for your bills for about 3 to 6 months? It could be unemployment, it could be disability, or maybe you don't even have the savings and you're out of a job. So those are the things that we should probably take into consideration when saving. And then without your savings plan in place, you may live from paycheck to paycheck and accumulate debt to make ends meet. And that could just be using your credit card or just running your lines of credit. Now we're moving on to the next page here. Some clues to have a savings conversation. When should you evaluate the state of your savings account? That could be at any time, any day, monthly, if you want to do that, quarterly. And then let's see here. What are some events that would suggest it's time to assess that savings? Maybe you start a new job, you're starting school, preparing for retirement, you're having kids, expanding the family, having pets. Perhaps you want to buy a new vehicle or just prepare for education.
I got a question.
Sure thing.
Maybe you will cover this later. How do you know how much to save?
That's going to be at your discretion what you can accommodate. Personally, I would just suggest maybe going for 10%, but obviously, that's going to change for everybody. I can tell you one thing, I got a house, about 6 months ago. I wasn't putting any money into the savings. because it all was just going into that house, doing repairs, doing everything into it. So
So is it like, because I've heard it as well, where it's like 10%. I remember being younger, and my friend's mom would always be like, save 10% of your money, no matter what it is, you know what I mean? Just for that. So is that usually the guideline? Is like, if you save 10% from everything you get, like you get your check every week. Most of us, we're service connected, so we get our disability checks every month.
okay.
Some of us, same thing with schooling. Is that the kind of guides go off of? It's like every time you get something, put 10% away for savings.
Yeah, that's the general rule of thumb. Like your take-home paycheck, just take 10% off the top of that, go right into savings. But obviously, like I said, everyone has their own needs, you know, so it's at your discretion what you want to put away into your savings. And then that goes into the cost of living. That's going to be different for everybody. So the average cost of living, this was as of August 2023, so subject to change. And then this just goes into like the breakdown here. And then what other bills you can expect or have to pay. I think the biggest one here that's missing out is going to be your hobbies. You know, everyone has devices. So whether it's fishing, golfing, basketball, sports, whatever. Yeah. And then, as far as like your savings goes, the emergency savings was recommended is 3 to 6 months of expenses. So as long as you have that much in your savings account, you're in a good position.
What's the estimate time that you think you're doing all of that? It's gonna take you a while to get that 3 to 6 months of savings, right?
Yeah, I mean, if you're putting away 10% of your paycheck every, what, 2 weeks?
Yeah.
So 20 weeks, that's going to be.
Yeah, that could be a year almost. Probably longer than that. Yeah, it really just depends. So.
Yeah, I mean, and that's the big thing. If you're chipping away at being consistent, putting a little bit of money away each month or each paycheck, that's big. It adds up. And then when you do have your financial priorities or your goals, it's important to just identify those goals, the short-term goals and the long-term goals. Maybe the short-term is going to be starting that emergency fund. You know, hey, $800 away. You know, as long as you're putting money into there, it's important. So maybe you're setting up your savings for life plans, saving up for retirement, or just even reducing that debt. And then why is it important to set up those short-term goals? It's going to be financial stability. It takes time, and like I said, you got to be consistent with that as well. And your small victories when you're putting away money each paycheck, that's going to lead to the big one. And then another short-term goal, like I said, start that budget, review that credit report. As far as the credit report goes, you're entitled to 1 free credit report annually across all 3 bureaus. So you can pull 1 credit report right now and then just review that, save the rest for later in the year just to monitor it if you like. But like I said, you can pull it 3 times. And then I'll get you those credit bureaus too. They're all included in your packet as well. And then another question on here, this is kind of a general one, but what kind of steps would you use to save up to buy a house? Reducing your debt. That's going to be a big one because those are your monthly expenses that are going out. And when you're applying for that house, that's one thing the lender is going to take into consideration is how much money is going out, and that's going to go into your debt to income ratio, which is taken into consideration.
And what is the average debt to ratio? To kind of put yourself in position to.
I think it can be over, I think it's like 25% or 30%.
Yeah, it's around that, yeah.
So that's.
So your debt can exceed
30%. So he made
Yeah.
$1,000 a month. Just using this, $1,000 a month. Your bills can't be over $300.
No, it's like, isn't it like your available cash for spending for other things other than like the house, what your mortgage would be, like can't exceed that, right?
So break it down for, say that
Let's
everybody.
see if I can.
So let's say your mortgage is like, let's
Out of
say-
that thousand, just use the
right,
thousand.
let's say, so your mortgage is 700 and you only make 1,000.
Okay.
I don't, like you wouldn't qualify, but I don't know if it's like 40%. Basically, you have to have like same thing for an apartment. If they figure out like with all your bills,
3 times your income.
yeah, like the same thing for buying a home, but I don't know the exact formula. But you have to have enough money available outside of like your debts and stuff, or, because they add in like your car payment, everything. And if you don't have enough money available for what they think like that you would need, maybe a house repair, whatever, you exceed that debt to income ratio. So I didn't explain that very good, but you know what I mean?
I'm not the lender. Yeah, when it comes to like mortgages and all that stuff, that's like, I don't know.
Because I know with the, like,
Just leave it there.
like getting a place to live nowadays, they like to see you making 3 times whatever that rent may be. You know what I mean? Yeah, like if you're paying $1,500 a month, they expect you to make $4,500 a month, and then that way, if there are any other expenses that you do incur throughout that month, you have enough money to make sure that you're still able to pay for that rent every month. Which makes it kind of hard for a lot of people, because a lot of people, with the cost of living nowadays, obviously it's pretty high, you know what I mean? And then the minimum income, it's hard for people to exceed that by 3 times the amount. And that's basically what you're saying, is kind of the same idea for the mortgage, right? It's
Yeah.
3-4 times the amount, you know what I mean? So then that way you're covering costs for anything that may happen.
So now you have to justify your down payment 20%.
Oh, yeah.
Plus 78 loan.
Yeah, if you don't like get that 20% down payment, you gotta go into private mortgage insurance, and that's.
That's actually 50%.
So you have to tell, now you have to tell them how you got down payment.
Oh, yeah. Yeah, it's so hard.
Yeah, they changed that. That's
But it's
recent.
gotta be, like I was looking at that.
Plus 78 loan.
It's fun, it's true. I feel like it's the way they can screw you. If they don't wanna do that out of the house or something.
And then some things that you can ask yourself as far as your savings goes, what are your short-term goals, your long-term goals, and the big one, what are your comfortable saving today? That's gonna be a big one. And then it goes into how much your income is disposable, how much are you budgeting toward your savings right now, if anything? What is your budget financial priority? How are you meeting your savings goals today? And what major expenses do you have coming up in the next 5 years? Honestly, I don't expect the next 5 years. My air conditioner is going to go out soon, so I'm expecting that next year.
It's different, like with kids and all that.
Oh, yeah.
Obviously, bigger expenses that may have to be involved with them. Yeah, over the next 5 years, I never thought about that.
And then we're going to go into item number 2, which is budgeting. It's going to be on page number 9. So what is budgeting? So we're creating a plan is what we're doing to spend and invest your hard-earned money wisely to meet your personal and financial goals. So what are some indicators that you should assess your budget? Some indicators, so it's going to be receiving overdraft fees. Those are just going to eat up your account. Maybe you're getting denied for a loan due to poor payment history, maybe high ratios, so that's the debt to income that we're talking about. Escalating debt, multiple loan payments coming out of your account, or just poor capacity. So maybe you go to apply for a loan and maybe they simply just can't accommodate that next loan. Perhaps you got a change in income, whether you maybe lost the job or maybe you got a job that pays more, pays less, but those are times just to sit back and reevaluate your situation. The biggest goal here is just getting out of debt. That's a big one. Maybe a large life change, you have a kid, change your job, perhaps maybe you're even a first-time borrower. So that's a time to reevaluate your budget, because now you have to accommodate for that loan. Creating a budget here, so that's going to be the next page. I believe we're on number 10. So the parts of a budget here, your expenses, we're just going to average out your basic living expenses. If anything, when you're doing your expenses, just round it up. That's the safest thing that you can do.
So if I'm making 2,000, I should just round it up to 10?
Yeah, right. We're just rounding up to the nearest. Yeah. Your monthly expenses to maintain your desired lifestyle. So if you have like dining, entertainment that you do, subscription services, stuff like that, make sure those are included in your budget. And then I do have an example of a budget breakdown in your folders as well. So that's going to go down all the itemized expenses, your incomes. You can tally all that up, add it up, and then you can add and subtract what you want on there as well. So that's going to give you your estimated budget for that. And then in that income breakdown is going to be your take-home pay, other regular sources of income, whether it's child support, alimony, Social Security, if you're collecting VA benefits, those are going to be included as well. And then there is a formula on that income statement that we got. So it's going to be your take-home pay. It comes up, it includes your amount of debt on there, and then also like your bottom line. So after your income and your expenses, it's going to have what you have left over, which is going to be your disposable income. And then some additional clues to have that budgeting conversation with yourself or with another individual. That's going to be, do you have like unnecessary expenses? So everyone has like their impulse buys. I do that, you get to the golf store, I'm not getting a car.
Oh, yeah.
Those do happen. So you just got to remember just to have that discipline and step back and ask yourself, do you really?
That's the biggest thing. That's my. Like, oh yeah, I'm there. I got enough money.
Yeah, free parlay, I'm gonna take that.
Yeah. Oh, if I spend 50, I get 50. Okay.
And then what is one way you will adjust your expenses to save for your goals? Just round the impulse buying, that's a big one. What additional insights did you discover from completing your budget? Once you go through that budget, you can find these numbers, whether it's your subscriptions, how much you're spending, how much you're going out to eat, that's where you can use that. Your budget improvements. So what you want to do, just review all of your savings. If you can save one by switching car insurance. Oh yeah, I'm sorry.
I'm looking at this budgeting system. It has an E folder and different folders. What is the E folder? What is that?
Oh, let's see.
Is that something you can do digitally online through your bank or just different?
Oh yeah, that. Depending on your bank, they may offer that service. So if you go into their online banking, you might be able just to pull your statement and put it into like an Excel spreadsheet, or it might produce charts. I know with my banking, or we do offer that service, so it does break down your expenses.
And is that more so too, like you set up this budget through them, and your money comes in, does that money go, bam, right over there, you know what I mean? Is that how that works, or is that still something that you have to do?
No, it just transfers over automatically. If it is with your bank, but if you use like a third-party app, then yeah, you will have to make that connection.
So it's easier to do that with your own bank then?
Mm-hmm.
And then
If it's a product that they offer.
That way, once let's say the first of the month comes, your rent goes to where it's supposed to go to, your electric bill, you know what I mean, all of your stuff is going where it's supposed to, and the allocated money that you have for savings goes directly to your savings.
Mm-hmm. Yeah, you can set up those automatic transfers or automatic billings.
And that makes it a lot easier to stick to that budget than
Oh, yeah.
imagine.
Mm-hmm. Yeah, just to set it for good. Yeah.
All right, and then the other one, is that just what you do by yourself?
Yeah, so that's gonna be the old school ledger, where you just add and subtract it. Yeah, all
Do
that.
most banks offer the e-folder?
But going back to the budget improvements, yeah, it's just important to reevaluate like all the services that you get: cell phone, car insurance, home insurance. Just shop around every month. You kind of be surprised how much you save. Like with State Farm, they kept on jacking up my rate every time I went to renew and I went to get a new quote at my Geico. Save a lot of money. So yeah. So bundling saves money too. Car insurance, home.
Washing clothes in cold water and
Yeah, that stuff adds up. And then your food and your clothing too, eating out, it's expensive, it adds up over time. So if you cut back to once a week, that's great. Make those small adjustments in your life.
come and boot, you get a free meal.
Yeah, there you go. And then even with transportation, carpool if you can, ride your bike around town, get ride shares, combine your trips. I'm always doing that one to save money. And then toolkit number 3, that's going to be your credit. So we're going on page 12. So why is your credit important? That's going to be used to get approved for loans. That's how you get reasonable insurance rates, your ability to receive housing, even like just your standalone credibility. There is a cost of bad credit though. So let's see here. If we're borrowing $15,000 for a 60-month term, so it's going to be 5 years. If you have good credit, let's just say you're going to get an interest rate of 7%. So then your monthly payment is going to come to $297, and your total interest payment paid at the end of the term, at the end of that 5 years, is going to be $2,800. Versus if you have bad credit, for the same amount in the same term, you're going to get an 18% interest rate, so it's going to be a lot higher, bringing your monthly payment to $381. And at the end of that 5-year term, you're going to pay $5,000 more towards that same amount.
If you can get approved.
Yeah. Mm-hmm. Yeah, because the way that bank is looking at it, they're the ones taking the risk with it. And that credit is just going to impact your overall scenario because we all know that $5,000 at the end of 5 years, it's a lot better than that. Mm-hmm. But there is a life cycle to the credit. If you got no credit, bad credit, you can always build that up and maintain it. You're never stuck in one spot. What are some indicators that they should assess your credit? Sorry. It's been a while, or maybe you never checked your credit. Like I said, you can always pull that for free and assess what's going on.
How often should you do that? Should it be a yearly thing or every 6 quarterly?
Yeah.
Okay, quarterly. So then that way you're able to recognize if there are things on there that shouldn't be there, identity thefts, different stuff like that.
Yeah, like if you're starting to get mail from like institutions that you've never applied for, don't just throw it out, open it up and see what that context is. Because if they're saying, hey, thanks for applying, you never applied, call them up right away.
And that's
like,
where you also, I know you hit on earlier as far as like the credit bureau or checking from different ones. You check one quarter, you check one another quarter.
Spread out for the year. Yep. And then on those credit reports too, you can also sign up for credit monitoring. So if someone hits your credit, you'll get a notification for it. Some other indicators to assess your credit. Maybe you're turning 18. I think we're all older than that here.
I'm just about there.
Yeah.
What would you say to the credit bureaus?
Some institutions offer credit builder loans, so they require you put $1,000 down on it, and then they're going to take out a loan against that $1,000, and you're going to make payments towards that over the course of maybe a year. And at the end of that term, you're going to get all that money, and then they report that to the credit bureaus as you make a consistent payments towards it. But as long as you're just keeping up with your payments and staying consistent with it, that's when you're building on that. And I think we're also going to touch base on it a little bit more too. So there's some other bits as well. But some other indicators to assess your credit. Perhaps if there's collections or bankruptcies out there that are reporting against your credit. Maybe you're only making minimum payments on the credit cards. Debt to income, maybe that's a little high. Your credit card balances are near, maybe you've reached their limit. Perhaps you have some late or missed payments, lack of varied types of lending products, so maybe you just strictly have a credit card. Maybe you have some large life events, buying a house, getting out those applications, those can have an impact on your credit as well. And then once again, the excessive overdrafts, those can also be credit time. The factors of a credit score. So all these things are going to go into your credit score. So this is going to be your payment history, your credit age, and the mix. So if you got an old credit card, or perhaps maybe you have a bunch of different loans out there, those are all going to have an impact. Your credit utilization, so that's going to be your credit line. So if you got a credit card for $1,000 and you're hitting that max every single month, it's not going to look good because you're utilizing that full credit. Typically with the lenders, what they want to see is 30% usage. So if you got a $1,000 limit and you're going $300 paying it down each month, that's fine. That's perfect credit usage. And there it is. Yeah.
$1,000, I gotta use it all.
And then the balances too, that's going to have an impact. Recent credit applications. So if you go ahead and apply for that car at the dealer, they're going to send it out to a bunch of different institutions. So if you go and pull your credit card or credit report after applying for a car, you're going to see a bunch of inquiries. So that's pretty normal. And then also your available credit as well. You know, if you got a bunch of credit cards out there and your limits are really high in there, you're not utilizing that, that's going to have an impact. How long can missed payments stay on your credit? So that can vary. It can show, if you miss a payment, it's going to show up as a missed payment for 2 years, but after you make that payment, you're current, it's still going to show up on the credit report for 7 years. So there's still going to be a lease. Even if you're current on it and you're making the payments, you say, hey, I actually, I missed one, it's still going to be report.
So 7 years of non-missing payments. After you miss a payment, and then after you get your loan.
Yeah. So which trade line is the most important to keep open? Honestly, they're all important as long as you're going to. Why shouldn't you open multiple accounts in a small period of time? It could possibly look desperate. It's like, why? From the lender, it's like, why is this person applying all the time for all these different credit cards? What I have seen in the past is with credit cards, sometimes they offer that promo code, like, hey, open this card, we'll give you $500 in X amount of days. And I've seen people just, seek those out just to get the promo code, the promo balance, and then close it. There's nothing wrong with that. I've seen that before in lending, and we just need that explanation. Sometimes that can prompt concern. And when you're making like all those applications and you're sending the credit out, it's going to bring the credit score down.
Now, when we get the promo code, like you said, you go to the account and get $500, so you got to keep the account for a year.
I was gonna say, yeah, something like you gotta keep it open for a year. And every quarter they release like a little bit of it.
Yeah, you see, you might, anytime.
That fine print, some fallacies of credit offers: no payment for X amount of time, 0% interest time frame purchases, credit card purchases, trading off vehicles before they're paid off. Those can have an impact on your credit score. Let's see. How can no payment offers negatively impact the factors of the credit score? So no payments, you're not making payments, those payments aren't going to get reported to credit bureaus. It's important because that's what they're looking at. They want to see those consistent payments coming through. Sure, as a consumer, no payment is kind of enticing because he doesn't want to make a payment for X amount of months. But if you're looking to rebuild that credit, make those payments. 0% interest offers negatively impact the factors of the credit score. How can that happen? If you have a 0% interest loan, that's perfectly fine. But if you keep taking advantage of these, more loans are going to show up on your credit report, more inquiries, and that could have a negative impact. Especially like if you have a 0% interest credit card and you're maxing that out each time, because why not? 0% interest. If you're maxing that loan out, the lender doesn't want to see that. You want to utilize that 30%. How can credit card purchases negatively impact the factors of the credit score? If the credit card purchases increase utilization, that's going to increase your credit score. You don't want to utilize the full credit line. And then how can trading in vehicles pay off negatively impact the factors of the credit score? Is closing that loan out is what it is.
And they don't like to see you pay it off early.
No, they want to see it go to the full term. Like as the consumer, of course, it's good to pay it off early, that's what you want to do, but from a lending standpoint and credit bureaus, yeah, they want to see that.
Now, is that just, because I've heard that about vehicles all my life, is that just for vehicles? What about like your home? Is it ideal, like if you've done all your budgeting right, and you're trying to be debt free, you know what I mean? So where you are paying these things off, and you're utilizing your income to be debt free, so that way you're debt free early and you don't have these expenses later on. Is that frowned upon too as far as the home loan?
I'm not too sure about that.
I don't think it is because your house gains value, or like cars depreciate.
Yeah.
So when you pay off your house early,
You
have an asset where like you pay off the car, like cool, but it's continuously going to depreciate unless it's like one of the exotic cars, like one made or whatever. But that's not anyone's case.
Yeah, makes sense. Thanks for that.
I thought a vehicle, if you cash out a vehicle, I think the penalties for that. I understand if you trade it off early, then you're just adding what you had onto the next note. And then you end up upside down with your next car. But if you cash it out and trade, there's always the trade value there, the payoff amount. But it's different from the actual balance.
Yeah, because when you do that, I mean, as far as like how much is going to impact your score?
Well, I mean, you call them up and be like, all right, what's it going to cost to cash it out right now?
Yeah.
Because you could do that.
Oh, 100%, absolutely. Yeah.
And then that affects your credit negatively.
It can Now how much is like,
Well, there's always
it's not gonna bill us that.
Yeah, but
there's always a cash out.
Yeah.
But then it knocks it off the credit.
Yeah.
So why don't you get things for that? Just pay it off
Yeah, I'm not too sure about that one.
because they didn't get their interest.
Yeah, that's
More
more
or
like
less,
they penalizing you for doing good. You're doing too good, we're gonna penalize you for that. You're not gonna play.
I mean, I can see why they wouldn't want you to like roll over the loan. You're upside down in your car and trade it in because it's costly. Just to get a car that drives, and now your last 8,000 on that note went to your new note, and now you started your note upside down. You can see how that could affect it negatively. But if you cash it out, that's bad. That's fine.
And then how to resolve like these negative trends on your credit if you have any. So the negative remarks on there could be collections, civil judgments, bankruptcies. You could just try disputing it with your collection agency if there is one. After 7 years, you could try disputing it, or like if the collector sells off, they sell it to another collection agency, you could try disputing it at that point. You could even ask for maybe a goodwill deletion. Say maybe you had a hardship, you could try disputing that.
What?
What's that?
You said it's a what?
Oh, like if you had a goodwill deletion, so if you have like bad debt out there, hey, maybe you had a hardship during that time, you could ask for it. Takes much. Yeah. The last one is just going to be paying it off. Sometimes you guys got to take it on the chin, pay it off, take it off.
Still going to be there for 7 years.
Exactly. And then monitoring your credit is going to be important. Those are just some alternatives to the 3 credit bureaus. Is going to be Savvy Money. And then this annual credit report, that might be a service by your institution. So if you guys got like your banking app, you might be able to put your credit report out there as well. And then creating a plan, like I said, we're going back to your bank. Sometimes I do have a financial tools. Like, at Advocate Credit Union, we do have a financial tool that tracks network, budgeting, trends in your spending, and then debts as well. And I'm sure with all institutions, you could sign up for account alerts. So if you get like a debit card purchase over $100, it's going to send a text message. Those are the big ones. Were there any questions about this type of so far?
So the Savvy Money credit score thing, is that just your Advocate or just a different website you sign up for?
The Savvy Money, that's a good question. I'm not too sure. I think that might just be a general service for
And you said your credit, your bank or your institution, wherever you because I see mine on mine, and they offer their credit score. How accurate is that credit score to the actual credit score? Is that just their credit score for you with their banking institution, or is that like the?
No, they're going to be pulling that from one of the bureaus. It might be, I want to say it's like Experian, but don't quote me on that. Yeah, because one of the credit bureaus do like soft pulls, so it's not like a hard pull against your credit where you're going to see an inquiry on your credit report. So yeah, in general, it's going to be around.
Yeah, I think USA uses like Vanguard, so it's like monitor score, and then I think Chase uses Experian. Like that.
Yeah, you can make accounts on all three of those bureaus. It's free. And then the links to those credit bureaus is going to be in the packet that says like link them. So if you want to make accounts on there, like I said, it's free. It's free of charge. You don't have to pay anything for it. You're entitled to one free credit report annually across all three bureaus. So after this, if you go to pull your credit report and you see something on there that's unusual, just follow this packet, and then you'll be able to address it. You can contact that institution saying, hey, we got XYZ going on, and we want to get that addressed. And then there's also a budget in there as well, as a form.
Is that just on the setting up the budget?
Oh, yes, that, yep. And that's going to go over your personal expenses. Obviously, you don't have to fill that out right now. But that's just going to give you a good idea of what's in your budget, what you can afford, and then you'll also be able to see where you can maybe save as well.
What do you think about kind of open up CDs and stuff like that?
It's a good idea if you can afford it. Obviously, you're locking up that money for X amount of time for that. CD rates are kind of low right now, so you might be better off trying to just keep the money in the savings account. That way, if something happens, you can just pull that money out and there's no fees whatsoever. Versus with the CD, if you have something come up and it's like we'll just say it's an 18-year term or 18-month term, and something happens 6 months into it, they're going to hit you with a fee. Whatever you earned off of that, they're going to fee you. So, yeah, definitely look into your banks to see if there's like any type of high yield savings.
Well, the high yield savings account, you put in like $10,000 or more, right? Most of the time.
Yeah, there's certain stipulations to that, like whether they want you to have maybe a credit card or maybe a car. They want you to have multiple products with them to earn that high yield.
Then with this too, let's say, just general questions I have here. Let's say you do get a new job.
Mm-hmm.
The smart thing to do in that, and you're making more money, the smart thing to do would it be to stick to your original spending habits, obviously, in order to be able to save more money. Don't use that extra money coming in as a way to go out and start making more debt for yourself.
That's what I would suggest, because it's like, if that's already a habit and you're kind of comfortable with that, why not take that extra money and just put it around in your savings?
And how would you say as far as if it's the other way around? Now your job changes and you're not making as much. How do you adjust? Is it just figuring out how to not spend so much.
Yeah, you gotta cut where you can. So whether it's, I mean, personally for me, the first thing that's gonna go is eating out. So eating out, yeah, like going out to dinner, that's gonna get fun. You know, obviously you can still do it, but you wanna do it a lot. Subscriptions too. You know, go through all your subscriptions, whether you're using streaming services, filter all that out. And like, even if it comes down to it, if you're contributing towards your 401k, as much as I would discourage adjusting that contribution down, if you gotta do it, you know, it's something like that.
Or just go out and find a part-time job or something like that.
That's it, yeah.
Something along those lines.
But that's pretty much all I have for today. You know, when you pull your credits, we can come back next month and then revisit that. If you have questions about your credit report, if you have like something on there that you're concerned with, or you need more explanation, look into that.
And then I would just suggest, what I'm gonna do, as much as I wanna write, I will probably write down a lot of just the stuff that you gave us from this handout, especially just trying to set up that budget, but knowing that we can do that through our banking app, you know what I mean? Is it just strictly through the banking app, or do you have to call in and talk to somebody, most of these institutions?
It should be on there. Yeah, I think most institutions offer that. But if not, I'm sure there's like third-party applications you can download, and then you would just have to transfer all that information. It's usually pretty handy.
Yeah, I know some guys that like, they open up a cash app account or whatever, and they're like, all right, my budget for the week is gonna be, or for the month is gonna be $200 on just that card. They take money from their checking account, put it in a cash app card, and that's their spending money. So like, eating out, freaking, I'm gonna go freaking movie tickets and stuff like that, and once it's gone, it's like, all right, cool, I guess I'll wait till next month.
Yeah.
They redeposit it, so.
You can't get them.
Yeah, so that way they like, don't spend their money, they only spend their spenders.
Yeah, and then there's ways to freeze that card too, right? Like you can't spend, like you said, if you spend over a certain amount, like they won't even let you, but if it's $100, if your max purchase is $100, and you go somewhere one night at a bar, and you're out hanging out, and the tab comes, and you're like, oh, and it's like, no, you can't.
You're washing dishes that night.
Yeah, you can wash the dishes that night, and it's another way to make sure that you are not spending the way that you can. It's just a reminder, right? I think that's the thing that plays in a lot of our heads. It's just like, oh, we got it, we'll be okay, we'll make it up the next time. It's hard to stop that impulse buying. You know what I mean? It's the impulse buying that bites me in my butt every time. It's just like, oh, you'll be okay if you're getting paid in a couple of days. And it is. So it's just setting it up, having a discipline to do what you said. Maybe if it's just have yourself a limit for the month, no matter what that is, no matter what you're spending on, once that's gone, you're done. But I think the journey in that is going to be those times where it's just like, dang, I can't. But the end goal will be you looking at your budget in a couple months, and then you're seeing the increases to your savings. You know what I mean? You know where your money's going, as opposed to the paycheck to paycheck where you feel like every time you look around, you have no money coming in.
Yeah, it's important to have that nest egg. In case something happens. So whether it's,
I mean,
$50 here and there, tossing it in there, who's this?
yeah, no, it's good to see that money pile up, and you're like, wow, that's, nice to be able to have that. I know with a lot of the veterans that we deal with, a lot of them are fighting to get that service connection, right? And they're already needing that money to come in. But when it does come in and you get that back pay, it's good to have that as your egg nest or whatever, just a nest that you can go to whenever you need it. But it's hard. It's like super hard to see that money sitting there and being like, man, I have to you know, I haven't had it, I haven't been able to splurge on myself in a long time. So it's having that discipline to not do it and think about, like you said, the future, buying a house, being able to do those things that are long-term goals. So yeah, I think, I'm hopeful this will help some of us, you know what I mean, if not all of us, just to be able to grab a hold of our finances. Just a big thing, like I said, we don't talk about, obviously, mental health, they bring that to the forefront, you know what I'm saying, so much now, where everybody's like, okay with that, but a big problem that we do still have is with our finances, and that causes some of that mental health. So not having to worry about that can alleviate some of those worries or stresses and all of that stuff.
Yeah, so if you got those debts on your credit report, they pull it, so hey, if you gotta pay that down first rather than put money in savings, that's good. You're saving money on interest. That's the biggest thing.
You know about 401? You know about 401ks?
I'm sorry, what was it?
You know about 401ks?
401ks?
Yeah.
No, I'm not a 401k specialist. Yeah, I don't want to mislead anybody on that.
You got a question, though? Maybe somebody here can help.
You know, there was a company up here in Ringway, and that was Bridgefield. It's called Chemical, and it moved to outside of Rockford, they had it blew up and all that shit.
Yeah.
I used to work for them. I had 401ks with them.
Okay.
And one of them, when you go to a company and they say, you know, you get a 401k, you can invest in the company, in the list of companies they give you. But and that list of companies they give you, my father-in-law is heavily into stocks. He checked it out for me. He said, see if you can invest in the sister companies, they're making more money. I did that with one of my 401k plan. I still get my stocks over a year ago.
Okay.
And they had to do the check on them. But the other one I did, this was Brad and blew up. I can't get a hold of nobody. I don't know.
So your money's sitting there.
Yeah, I don't know where it's at. You know.
Should be FDIC insured.
If it's a complete loss? Oh, yeah. Okay. But
Every 401k is FDIC insured.
Okay.
So you should be able to get issued that.
Oh, yeah. Yeah. They didn't just take that. No.
Yeah, not even that, you can go to where they have it to where I've seen it a couple months ago actually, where there's like lost money, right? The Illinois Treasury has all of this money that sometimes you put in the 401k, sometimes you know, different things that money just may be sitting there. There's a search, I gotta remember what it is. But if you go in there and you search, you put your name in.
Just like that unclaimed money.
Yeah, unclaimed money, that's what it is. It's like that, and they'll let you know it's either like, if it's over $100 or if it's under, they won't give you the exact amount. But what they'll end up doing is you sign up for it, they'll eventually say, okay, this is what it's gonna take, and then you can go in there and look at it. And that should let you know right there, what's in there. You'd be surprised at how many of us have that this money that's in there, unclaimed money that's in there.
Years ago, I did that, and I had a check from a job that I worked like 5 years ago.
Yeah.
It was like $1,100. And I'm like, so, yeah, look at it, like I saw it, and I'm like, oh, I'll try it out. Sure enough, dude, I had a check from a job. And eventually they have to like send it to the state, and they just hold it and wait for you to come get it. But after a certain amount, like 10 years, something like that, they can just swallow it and get it. So I looked, I had a check. I think my grandma had like a bank account or something like that from years ago that was unclaimed. And again, they sent her a check for like $400 or $500. People have, dude, there's billions in this fund. People don't even know that they have this money laying around. I would check it. If I were you guys.
Why would you always check it, right? You say it's a 401k.
It could be anything. It could be property tax. It could be
Inheritance.
anything, yeah.
A year ago, stock split. There's other sister companies, which is really good, because when I came back to HR, I got it. You ain't even really know. I'm about 2006,
Do you have any resources on where you can start?
your guys have been working for like 10 years.
It's insured.
Shit, I've been doing 30 years, I got a check right here.
I just
It's one thing I'm finding on.
Where can we start?
Let's go, one thing to do to check my, I guess, I'm okay with it. You know, there's not any money in that one.
Gotta be able to go.
Hopefully this helps you be able to get some understanding about that too.
Just trying to remember.
While we look forward to this week, we're gonna do, like I said, this is just the basics. We get the basics, we understand what's going on, taking hold of our financial situation. But we're gonna get some people in here, hopefully from the VA, to explain the home. You know what I mean, how that process works. Hopefully places you can actually go to physically and just sit down with them and figure that out as well. But this is obviously just a start. I appreciate all y'all coming to this one.
We should be able to.
And then who's ever online too, like I said, we'll do it again. Probably the beginning, beginning of the month for the second time, so just do it yearly. It sounds like you know a lot about it, obviously, if you're coming to groups, you know what I mean? Maybe that'd be something that you can help us out with, you know what I mean? Whatever that is, so.
Like you can always transfer all your funds in case of one business account.
Yeah. Who's your guy there? He was asking about your different locations?
Oh, yeah, is it just Woodstock? Like,
Oh, no, we got Woodstock, Crystal Lake, we have Cary, we're also up in Wisconsin as well, we have Wood, Rockford, Silver Lake.
you guys like the ATMs, do they work with like other ATMs or?
We do, yeah.
Okay. Yeah, 'cause like, that's the issue, like, I'm on an ATM and I have like, I need federal, and they charge like a 3 or 5 CP.
Oh, yeah, well, we have tonight.
Uh-huh.